A few months ago, it felt like everyone was talking about the debasement trade, and for very good reason. Gold was on fire, silver was running hot, commodities were strong, and a lot of people were saying the same thing. The dollar is being debased. The government is spending money it doesn't have. Debt keeps rising, deficits keep growing, and the only smart place to be is in hard assets. And to be clear, I completely understand that argument. I've made some of those arguments myself. But then something happened. Gold pulled back. Silver pulled back even harder. Commodities started weakening. And the dollar, which many people thought was supposed to keep falling, started getting stronger. So now a lot of people are asking the obvious question. What the heck just happened? Was the whole debasement trade wrong? Did investors get carried away? That's what I want to explore in this video. By the way, my name is Noel Lorenzana. Welcome back to my channel. And I want to thank the sponsor of today's video, Gold Bullion Partners. They're a trusted source for precious metals if you're in the UK or Europe. More on them later. What is the debasement trade? At its core, it's a pretty simple idea. Governments spend more money than they collect in taxes, so they have to borrow. Over time, the debt grows, interest costs rise, and the supply of dollars increases. Now, when more dollars are created over many years, each existing dollar gradually loses purchasing power. That's what they're referring to when they talk about currency debasement. It doesn't happen overnight. Your dollar doesn't suddenly become worthless. It's something that plays out over years, decades even. And you notice it when you compare what everyday goods cost today versus what they cost just a few years ago. That's one reason many investors own hard assets like gold, silver, real estate, farmland, or even businesses. The thinking is simple. If money gradually buys less over time, owning scarce or productive assets may help preserve your purchasing power. As a general idea, I think there's a lot of merit to it. When I think investors sometimes get into trouble is when they quietly turn a long-term observation into a short-term expectation. If the dollar's being debased, then gold should always be rising, right? Silver should always be rising. The dollar should always be falling. But markets rarely work that way. So if the long-term thesis is still alive, why did gold and silver suddenly fall? This is where I think a lot of people get frustrated. They've been told for years that governments keep borrowing, debt keeps growing, and fiat currencies gradually lose purchasing power. Then over the last few months, boom, gold falls, silver falls even more, the dollar gets stronger. Suddenly, none of it seems to add up. But I don't think those ideas are necessarily in conflict. One of the biggest lessons I've learned about investing or trading is that long-term trends rarely move in a straight line. Now picture this. Imagine you're hiking up a mountain. Your destination is a lot higher from where you're starting, obviously, but the trail doesn't climb higher with every step. Sometimes it levels off. Sometimes it even heads downhill before it heads upwards again. Markets behave the same way. A long-term trend can remain intact while still experiencing corrections that are painful enough to make people question the entire thesis. Think about it. Price tells us what the market believes today. Fundamentals help to explain what matters years from now. Those two things don't necessarily move together. So before concluding the debasement trade failed, I think it's important to ask whether the fundamentals have actually changed or whether we're simply going through another difficult moment. One of the biggest reasons for that has been the US dollar. That may sound strange at first because if the dollar is gradually losing purchasing power over the long run, how can it also be getting stronger? Before we continue, I'd like to thank the sponsor of today's video, Gold Bullion Partners. This is actually my first precious metal sponsor, and for me, that's kind of a big deal. I'm a pretty conservative guy when it comes to partnerships. I don't want to work with just any company. It had to be a company I trusted, with people I felt good recommending to you. After getting to know the team over the past several months, I believe Gold Bullion Partners fits that bill. If you're in the UK or Europe and you're looking to buy physical gold or silver, they do offer physical bullion, secure storage, and delivery. They've also taken great care of several viewers from this channel already, which has only reinforced my confidence in recommending them. If you'd like to learn more, I've included a link in the description. Now back to the video. Let's talk about why a stronger dollar can hurt the debasement trade. One of the things that confuses people is hearing two statements: that the dollar is gradually losing purchasing power over time, and yet the dollar has recently been getting stronger. The key is understanding that both of those statements can be true. When people say the dollar is stronger, they're usually talking about its value relative to other currencies like the euro, the yen, the British pound, not necessarily its purchasing power over time. That's an important distinction. You see, the dollar can lose purchasing power over the long run while still strengthening against other currencies that are weakening even faster. When that happens, financial conditions tighten. Around the world, dollars are used to repay debt, settle international trade, and buy many commodities. So when demand for dollars rise, investors naturally have to sell other assets to raise cash. Gold, silver, oil, and copper can all come under pressure at the same time. That doesn't necessarily mean the long-term investment case has changed. It simply means liquidity has become more important. And we've seen this before. During the financial crisis in 2008, gold initially fell before recovering. Something similar happened during the market panic in 2020. Those declines surprised a lot of people because gold is often viewed as a safe haven. But in periods of financial stress, investors don't always sell what they want to sell. They often sell what they need to and what they can sell. Gold is one of the most liquid assets in the world, so it's often one of the easiest assets to turn into cash. That's why a falling gold price doesn't automatically mean the long-term thesis has broken down. Sometimes it's simply a sign that the market is placing a higher value on liquidity. And that brings us to the question that I think really matters. Have the reasons people believed in the debasement trade actually changed? Or have prices simply corrected? One thing accounting has taught me is that I try not to make big decisions based on one quarter's results. You have to look at the trends. When I look at government debt, I don't see it shrinking. I see it continuing to grow. I see large budget deficits. I see interest expense on the debt consuming an ever larger share of the federal budget. None of those trends disappeared because gold and silver corrected. Then there's the money supply. I think this chart tells a very important story. After the enormous expansion during the pandemic, M2 money supply declined for a period, leading some to believe that the era of easy money was ending. But more recently, it's been moving higher again. In May alone, M2 increased by nearly 248 billion. So for this year, it's grown by almost 700 billion. And today, the money supply sits roughly at around 1.3 trillion above its previous peak in 2022. In other words, despite higher interest rates and years of quantitative tightening, there are more dollars in the system today than at any point in US history. Let that sink in. Now, that doesn't mean inflation suddenly takes off next month. It might. But if we're asking whether long-term forces behind currency debasement have disappeared, I don't think that chart points in that direction. If anything, it suggests they're still with us. One way I've always thought about it is this. Imagine a company that keeps issuing more shares of stock over time. If the business isn't growing, Each share of stock represents a slightly smaller ownership stake. Now, currency isn't exactly the same, but the basic idea is similar. When the supply of dollars keeps growing over many years, each dollar represents a slightly smaller claim on the economy than it otherwise would have. That's one reason why many investors continue looking at hard assets as a way to help preserve purchasing power. I'm not saying gold has to go up next month or that silver can't fall even further. I'm simply saying that when I step back and look at the bigger picture, I still see many of the same conditions that led people to the debasement trade in the first place. Which brings me to what I think is the biggest takeaway from this entire video. It's quite possible to be right about the long-term direction while being surprised by the path it takes to get there. So what exactly happened to the debasement trade? I don't think it went away. If anything, I think it reminded us of something that's easy to forget. Long-term plans rarely play out in a straight line. Markets have a way of testing our conviction long before they reward our patience. That doesn't mean the long-term thesis is wrong. It simply means we shouldn't judge a long-term idea by a few months of negative price action. When I look at today's environment, I still see growing government debt, large budget deficits, and a money supply that's reached record highs after record highs. Those trends don't tell me where gold or silver will be next week or next month, but they do remind me why many people became interested in the debasement trade in the first place. For me, that's the biggest lesson from this correction. I'd rather make decisions based on the long-term trends rather than short-term emotions. But I'd love to hear what you think. Has this correction changed your long-term outlook for gold, silver, or the dollar? Or do you see it as another chapter in a much longer story? Let me know down in the comments. And before you go, remember this. Markets will always test your patience. If you want a deeper dive or hear my thoughts on this big silver correction, then you need to check out my video right up here. Thanks so much for watching, and I'll see you in the next video.